For joining in. Well, welcome to the stock markets, and all the best with regard to this IPO. We have got, the pre-placement that you've done. So the names as well out there look pretty good. But let's understand a few basic details. You're raising close to around 490 crores approximately, and you're going to be using it for debt, capex, as well as inorganic growth. Could you tell us, out of the total debt that you have currently, the consolidated entity, how much is it now? And post this fundraise, what does it come down to?
So, well, thank you, and thanks for having me here. So currently the existing bank debt for the whole company is 245 crores, and that's what we're going to repay 100%. So post-listing will be an absolutely debt-free company. And as far as the other proceeds are concerned, I think 133 crores is the capex that we'll be utilizing in order to buy, oncology machines, in order to buy surgical robots in the existing 4 hospitals. And as you mentioned, around 65 crores is there for the acquisition of new hospitals. However, we have a good portion of GC, general corporate expense, which is the remaining amount in the primary. And a majority of the GC could also be used for the new acquisitions that we're looking to do.
All right. So basically, you will be debt-free after this IPO itself, and the rest will be going into capex and acquisitions. We'll talk about that in just a bit. But let's talk about your recent acquisition. I mean, you've acquired a 305-bed MP hospital last year. It was not performing, it was not functioning between FY20 to FY22, restarted operations just last April. Just wanted to understand the updated, as of now, numbers for the MP hospital, because it's a 305-bed hospital. The last known numbers we have was making loss and was at an occupancy of just 8 to 10 odd %. Going forward, what is this particular property likely to do for you going forward?
So, this is a hospital we acquired, started in fiscal 23. It's a huge property. It's spread across 11 acres of land, in 305 beds. When we, did the study of the markets there, we realized that it has a huge potential because the area nearby, it's called Bundelkhand. It comprises of Jhansi, Orcha, and, nearby villages in Madhya Pradesh. So it has a huge catchment area, and all these patients were flowing to Delhi because there was not a big healthcare facility of this size nearby, even up to Gwalior. So that was the reason behind this acquisition, and we paid around 80 crores. For the whole 305 beds. So in the first year, it takes time for occupancy to ramp up. That's why it was 8%, because the first year went into changing the legal names, getting all the permissions from our company's name, and getting the NABH. And once you get that, that's when you're able to get all the health insurances, government schemes. So that takes time. And now, just over the course of last few months, we are able to do some of them. In the coming months, all the empanelments will be completed. And that's when, we are looking to ramp up the occupancy here. Traditionally, if you look, our hospitals in Delhi NCR, they usually have become EBITDA positive, in second and third year. And that's the same we expect from Jhansi Orcha territory. So I think in the coming year is where we expect it to be profitable, as well as giving good margins as far as EBITDA is concerned.
And the peak revenue for this property could be how much?
See, I think it's difficult to say an exact figure into that focus, but we feel that it can easily achieve an occupancy of around 60 to 65% in the coming years. And yes, the ARPOB is less there compared to Delhi NCR, but we do feel good reasons for the profitability in those markets.
Okay, all right. Yatharth, the stock market gets a little bit cautious when you have a lot of business with government. That's traditionally what's been the case. And I'm looking at it from the government schemes. The total contribution to your revenues is mid-30s. What is the plan out there? And if you could tell us how long does it take for you to receive your money?
So, we are evenly poised as far as, the 3-payer mix is concerned. So we have around 1/3 of the revenue coming from cash and self-payers, around 1/3 revenue coming from TPA and health insurances, and around 1/3 coming from governments. You also have to understand that the government patients that we treat, these are in the schemes of ECHS, CGHS, and ESI. These are not patients that are mandatory for us to treat from the government, because we have not received the land on any subsidized rate from the government. We have received and acquired the lands by being the highest bidders in the online processes. So we are not required to reserve any beds for, government patients. So these are the schemes that we are operating on our own discretion, on voluntary choice. And, some of these patients are actually living in the communities and the areas we live. Great Noida has one of the biggest societies for ECHS patients. So, which is quite close to a hospital. So, a lot of CGH patients like ex-bureaucrats as well who live in our community. So that's why we are, catering to them. As far as the receivables are concerned, yes, the debtor days is more as compared to health insurances. But overall, even then our debt days has come down. So I think right now it would be around 75 for fiscal 23. And I think roughly we expect that to going forward to come down more because the government is getting quite, is focusing on these payments to release fast.
All right, finally, before we let you go, the street would like to know a couple of things. 1,400 beds is what you have right now, 1,405 to be specific. Where do you see this number going forward, say 3 years from now? And at the same time, your occupancies at around 45% are much lower than all the other players in the industry, as are your average revenues per occupied bed. So these three numbers, if you could give us a sense where they would be trending 3 years from now.
As far as bed capacity is concerned, we have very aggressive plans to not just grow inorganic, but also organic. So two of our hospitals, the Greater Nord and Nord Extension, which are among the top 10 largest private hospitals in Delhi NCR, we have recently acquired the adjacent land parcels, in these two hospitals, and we will be adding up beds in these hospitals. So in the coming roughly around 2 to 3 years, these two hospitals specifically will probably be among the top 3, top 4 largest private hospitals in Delhi NCR when we expand these bed capacity. So that's where we are adding beds, as well as inorganic acquisitions are considered. We are looking aggressively for new properties to expand into the geographies of Uttar Pradesh, Delhi NCR. So we will be roughly, doubling up bed capacity over the course of next few years. That's the plan. As far as the occupancy is concerned, the overall occupancy might look less in the group, but it's important to look at hospital by hospital. So Noida hospital that we operate, which is our most mature and older hospital, has around 87% of occupancy, which is, one of the highest compared to our peers. As far as Greater Noida Hospital is concerned, that's also the occupancy 62% there. And in the other two hospitals, for the new hospitals, that's where the occupancy is lesser, which we expect in the coming years to ramp up to the similar size of our most mature hospitals. And ARPOB will also bound to increase because of the difference in the case mix. Now we are catering to high-end ticket size treatment, so ARPOB will also rise up in the coming years.
All right, Yatharth, thanks so much for stopping by. Wishing you all the best with regard to this IPO and all the best with the kind of work you're doing on ground as well. We look forward to chat up with you on the date of listing as well. For the time being, though, we'll slip into a short break, come back, continue our focus on markets and on some stock-specific action.